Nigeria boosts non-oil exports on the continent. Central Bank of Nigeria orders banks to collect indemnities from customers for highly secured online funds transfers. Sub-Saharan Africa accounts for more than 3/4 of the people without access to electricity, says World Bank. This is Business Express on the network service of the NTA, and we are reaching you from Abuja, the nation's capital. I am Musa Abubakar. Now let's begin the program with trade. Trade promotion agencies in Nigeria are intensifying the drive to promote the sale and visibility of made in Nigeria goods in the global market. To this end, the Nigerian Export Promotion Council is taking the lead in opening up trade houses in African countries. The first in Egypt, and another trade house is set to be inaugurated in Lomé, Togo, in a fortnight.
The essence of the trade house is to increase the visibility of Nigerian products, because we realize that there are issues of supply side constraints for Nigerian products. So we have a PPP arrangement with the Nigerian companies who take these goods from Nigeria, aggregate these goods here, and take off these goods to the export house where they will be displayed for off-takers to come and take off these goods. And of course, it will be like a showroom. It's a display house. It's a warehouse. It's all encompassing.
The Central Bank of Nigeria, CBN, has ordered banks to collect indemnities from their customers for highly secured online funds transfer, amounting to 1 million naira and above for individual customers and 10 million naira for corporate customers. The Apex Bank, however, placed an upper limit on the transferable amount at 25 million naira and 250 million naira for individual and corporate customers. The indemnity was meant to put liabilities for any infringements or risk arising from such transfers on the customers. CBN disclosed this yesterday in a circular titled Review of Operations of the Nigerian Interbank Settlement System, NIBSS Instant Payment System, and other electronic payment options with similar features, and signed by Director of Payment System Management Department, Musa Jimo. Let's take a trip to the currency market. The World Bank Group has said that sub-Saharan Africa accounts for more than 3/4 of people without access to electricity in 2020. It said between 2010 and 2020, every region of the world showed consistent progress in electrification, but with wide disparities. Electricity access in sub-Saharan Africa rose from 46% in 2018 to 48% in 2020, but the region's share of the global access deficit rose from 71% in 2018 to 77% in 2020, whereas most other regions, including Central and Southern Asia, saw declines in their share of the access deficits. Sub-Saharan Africa accounted for more than 3/4 of the people, precisely 568 million people, who remain without access in 2020. The share of the global population with access to clean cooking fuels and technologies rose to 69% in 2020, an increase of 3 percentage points over last year. Now, early this week, the International Monetary Fund, IMF, presented the Sub-Saharan Africa Regional Economic Outlook. It gave a holistic look at the Nigerian economy in the short and long term from the respective fund. The post-COVID journey and its truncation by the war between Russia and Ukraine featured prominently in that report. Shocks, vulnerabilities, and possible scenarios. Professor of Economics Ken Ife is with me to speak to these issues, particularly their implications for the economy and how they will be affecting you and I. You're welcome.
Hi, good afternoon.
Okay. Well, the IMF identified three spill-over channels: energy prices, food prices, and financial conditions. Which one hits the most?
All of them hit, to be honest with you. I wouldn't say food because we are right on top of it. But, foods are prices are high. But what I would say is that on the area of food, World Food Program, United Nations World Food Program, is actively in the market buying up food to take care of 20 million refugees, of which 8.5 million is expected from Ukrainian war. And Nigeria, we have over 3 million in the refugee camps. So that is creating some pressure on prices. Then you have the Russia-Ukrainian war that is affecting specific commodities. For example, wheat. We have more wheat from Russia than Ukraine. In fact, Russia is about 3-4 times more wheat than Ukraine. Together, they account for about 40% of the global wheat production. So wheat is needed for bread, is needed for bioethanol, is also needed for feed, feed meal, feed fish and poultry feed.
Yeah.
So all of them are experiencing rises in, sharp rises in price. Then of course there's also the oil and gas. Russia should be about the third biggest producer of oil after Saudi Arabia and America, and also gas. They are very, very high up in there, and then both of them give up not only the natural PMS and diesel and all of that, but the gas. About 40% of the gas consumed in Europe are coming from Russia, and they also use for phosphate, urea, and all these fertilizers. So the price of fertilizer has gone through the roof. So all of them are having impact, not only directly to us importing those raw materials in Africa, but also many of our industries, about 80% of them, depend on imported raw materials. So all those raw materials that are imported are subject to high prices occasioned by those things. So if you look at food is affected, energy is affected, and then the third one is the fiscal impact. Many countries don't have the fiscal space to buy more food at higher prices. So that's why the meeting of the IMF and World Bank, as you know, with WTO and UN, they're all saying to countries, please don't restrain export of food. What we saw in 2020, when we couldn't even get active pharmaceutical ingredients for pharmaceutical factories, and so many things come after that.
Okay, the IMF noted three major complicating factors to the regional outlook, which is different commodity exposures, social tension and political instability, as well as ongoing pandemic. What would be the best approach to tackling these?
Well, security is also there. You know, yes, they should include security.
I think
because security is number one in Nigeria. Because with this state of insecurity, nobody wants to invest, and that's very important. We have to understand that investment has to come first to create economic activity, which then creates employment, then creates disposable income.
Of course.
And with that disposable income, you can pay for education, health, and reduce social poverty. It's not this, the other way around is simply to go and rob Peter to pay Paul in the name of income redistribution or collect money and share, and that's not sustainable. So
what's the way?
So the security is very critical, okay. And then of course you mentioned the other parameters, which also come into the equation. But there is also the normalization, monetary policy normalization.
Okay.
Is now throwing spanner in the works because US has started normalizing and increased, and you see they've got about 8.5% interest in inflation, the highest in 42 years, and UK is 7%. So they are now beginning to push their monetary policy rates, which means that we are going to see higher when they are now going to 60% of world borrowing is denominated in dollar. So they're going to start repricing these loans, which means we're going to have to pay more for these loans that we've all taken that are denominated in dollars. And on the other hand, of course, the foreign portfolio investment and a lot of the FDI also will be lacking. There will be capital flight because they're going to go back where they can earn higher interest, as well as they are worried about the vulnerability, the fiscal vulnerabilities in our region. So they will be heading out. Those investments will be heading out. So we're going to be hit in those two respects.
Okay. The report particularly advised Nigeria to pay attention to energy transition, diversification, and boosting private investment. Do you agree?
Yeah, of course, yes. Now the transition, Nigerian approach to transition is to focus more on gas. After all, gas is our asset. That's the biggest asset we have.
But are we utilizing it?
Well, we could do better. We could do better, and that has always been, and that's the big plan that the country has for us to stop burning firewood, use gas, reduce the consumption of PMS and all of that, and use gas because gas is cheaper. Gas is more in abundance, almost 200 trillion cubic feet of gas in Nigeria that could last for hundreds of years, so compared to the fossil fuel, the crude oil. So. No, that's the whole to push more on that.
And gas is actually expensive. Now it has gone from even 700 to I think 750 or thereabouts.
I know it's very, very expensive now. It's really expensive, but we could do more in rolling out the gas. You know, we're still burning, we're still flaring gas in the region, causing a lot of pollution. Okay,
a lot of that report has been on the issue of subsidy, and if you look around. The queues are somehow back in Abuja and in other states. Electricity again is another pandemic on its own. Can Nigeria actually afford to move? Without the subsidy?
It's going to be tough. It's going to be tough because there's a political sensitivity around the removal of subsidy, petroleum subsidy. But I think it's approaching a scandalous proportion, and it's going to be unsustainable if we are going to go and borrow 4 trillion naira just to satisfy people's appetite for consuming petrol. And you don't subsidize consumption, you subsidize production. All the leading world powers subsidize production. America subsidizes agriculture, Europe subsidizes agriculture. So we need to be thinking of agriculture to subsidize rather than food. But we have to manage that transition in a way that doesn't hurt the economy and cause social upheaval and political violence. But there are lots of ways we can can approach that. And I've floated the aspect of actually looking at how quickly we can take an NPC to the capital market to get more people involved and release a lot more money to the federal government to reduce our debt and reduce. So,
and talking about that, what do we do about our unsustainable debts?
Well,
because from the report, it's likely that we'll be consuming so much in 2026, so much that...
Right. What IMF said is absolutely correct. But I have to warn you that we don't have to wait to 2026 to consume 100% of our revenue in paying debt. That can actually happen by the end of next year if we do nothing. But we are doing something, because I'm aware of an aggressive push by the Ministry of Finance on revenue mobilization. Very, very aggressive, and they're taking it from all ends. And I think when they are hoping to move from 7% revenue, government revenue from 7% of GDP to 15% of GDP, means that even if we were to do 100% on in steady state, with that drive to go to 15%, it will still reduce to 50%. So there is light in the end of the tunnel, if only we can keep faith with our target to increase that revenue by to a 15% by end of next year.
Okay. Thank you very much, Professor Ken Ife. Thank you for coming to share your thoughts with us.
Thank you very much.
Okay. Now moving on, African Commissioners of Finance met recently in Dakar, Senegal. The 54th session of the Conference of African Ministers of Finance, Planning and Economic Development was with the theme Financing Africa's Recovery, Breaking New Ground. Here's a summary of what transpired.
The 54th edition of the Conference of Ministers was recently concluded in Dakar, Senegal, which gathered ministers of finance and economic planning across the continent. The 5-day event, organized by the United Nations Economic Commission for Africa, deliberated on critical issues affecting the continent's economic development.
Et vous remercie de votre aimable attention. Merci.
One of the major highlights of the conference was the presentation of the Economic Report on Africa, ERA, which focused on addressing poverty and vulnerability in Africa during the COVID-19 pandemic. According to data from the report, the disruption caused by the COVID pandemic pushed an estimated 55 million Africans into extreme poverty, with Nigeria and Ethiopia topping the list of countries with the poorest persons.
ERA 2021 provides evidence-based analysis for stakeholders to develop appropriate anti-poverty policies to enable households to sustain their consumption above the poverty line, reduce vulnerabilities, and strengthen the resilience to future shocks.
In a reaction to these developments, Nigeria's Minister of Finance, Ajia Zainab Shansuma Ahmed, reiterated the various interventions by the Buhari-led administration in tackling poverty, particularly during the COVID lockdown.
The implementation of the Economic Sustainability Plan that helped us to stabilize the economy. A lot of jobs were created. A lot of micro, small, medium enterprises were supported so that they can retain staff and not lose jobs. So we continue to work to advance expansion of agriculture, support micro, small, medium enterprises to create more jobs, because that's the way to increase productivity and to reduce poverty.
The expert opinion by the Executive Secretary of the United Nations Economic Commission for Africa, Ms. Vera Songwe, becomes critical for Nigeria and other countries on the continent in dealing with the rise in poverty exacerbated by the pandemic.
In Nigeria, it's a question also about the structure of the economy. If the economy is in the hands of the very, very few, then we start talking about inequality and the really, really poverty. If you look at Ethiopia and Nigeria, they are not the same in the inequality index. Ethiopia has a much more equality than Nigeria does, because it's the redistribution effect in Nigeria that is not trickling down to those who do not have money to be built up. That comes a little bit also from the structure of the economy. If you have monopoly situations, if you have an issue, access to financial markets, then you begin to face these problems. So yes, the diagnosis ends up with the same problem, but the policy recommendations for both countries are quite different.
Now, to some market reports, Union Bank PLC has announced the completion of core investors' sale of a majority shareholding to Titan Trust Bank. In a statement on Thursday, the bank also notified the Nigerian Exchange Group of the resignation and subsequent retirement of directors from the board of the Union Bank. The directors included the Chair, Non-Executive Director, Mrs. Beatrice Bassi, and the Chief Executive Officer, Mr. Emeka Okonko. The statement added that in compliance with the NGX rule book and the amendments to the listing rules, Union Bank notified the NGX, its stakeholders and the investing public of the new developments. Union Bank notified the NGX that with the completion of the transaction, TGI Group, parent of TTB, had become the majority shareholder and co-investor in Union Bank after it received a transfer of 93.41% of Union Bank's issued share capital. And to the equities market. The equities market in Nigeria closed the week's trading on a positive note as investors' sentiment continues to improve after not so good end of May performance. The NGX All Share Index gained to 0.13% at 52,908.24 basis point as market capitalization advanced to 28.5 trillion naira. 282.9 million shares exchanged hands by investors value at 3.371 billion naira in 4,245 deals. Next is a global market update.
Hello and welcome to the Global Market Review. European stocks were mostly higher on Friday as investors await a key jobs report that will help gauge the strength of the US economy. The German DAX gained 0.35%, the French CAC also topped 0.19%, while London's FTSE still closed for the Queen's Jubilee celebrations. Stocks in Asia also rose this Friday as several major regional markets, including China and Hong Kong, were closed for a holiday. Notwithstanding, Japanese stocks led gains among the region's major markets, with the Nikkei 225 gaining 1.27% to 27,761.57. In the US, stock futures were muted in early trade as investors focused attention on more jobs data. The Dow Jones Industrial Average was down by 0.2%. S&P 500 also depreciated by 0.28%, while Nasdaq 100 also declined. And now African markets were in mixed territory on Friday. South Africa's JSE Africa Top 40, Namibia's overall index, and Ghana's GSE Composite all rose fractionally, while Kenya's Nairobi All Share and Tunisia's Tunidex were bearish. And that's Global Markets Review.
Yeah, thank you, Neka. Group Chief Executive Officer of the NNPC Limited, Millie Carey, has reiterated his commitment to sustain the strategic energy partnership between Nigeria and Spain. A statement by Garbadin Mohammed, Group General Manager, Group Public Affairs Division, NNPC Limited, says Carey disclosed this while addressing Nigerian and Spanish business leaders on investment opportunities in Nigeria oil and gas industry. In Madrid, Spain, on the sidelines of the President Muhammadu Buhari's state visit to Spain, describing the partnership between Nigeria and Spain as an important one for the NNPC. Carey said 26% of all LNG produced in Nigeria and 14% of all crude oil produced in Nigeria end up in Spain. He reiterated that Spain is an important market for the company. Carey explained that the world will need energy for today and for the future in industries. Now let's take a trip to the commodities market. That's it. This is where we end this episode of the program. Don't forget you can access all previous episodes on the YouTube. We value your feedback. Do join us again on Monday at 3 p.m. for another package. I am Musa Abubakar.